Well, good morning, traders. Welcome to Monday's call with me, Aaron Hill, one of the market analysts here at FP Markets. Time is now coming up to 8 a.m. GMT. So let's check out where we are on the charts in early London. As you can see, very similar to last week's technical call, we are still trading out of prime support on the weekly time frame. And we're also making a decisive, reasonably decisive bottom ahead of Fibonacci support on the daily time frame at 1420, 1522. Now, what's interesting on the H4 time frame, we are heading or closing in on resistance at 1622. Now, do note this is a prior, I believe it's a prior Quasimodo support turned resistance. And that comes in, as I said, at 1622. But what's interesting is it converges with a descending resistance. And I believe this was taken from the low 1794. So do watch out for this area today. What's also interesting on the H1 timeframe is, if you remember in our last week's daily market analysis, I believe I highlighted the Quasimodo resistance on the H1 time frame at 1605, and this was just plotted just ahead, just above the round number 116. So with that, we know there will be stops above the round number, stops from both breakout buyers and stops from those attempting to fade the level. And as you can see, we did have some reasonably larger sellers come into the market off the Quasimodo resistance at 1605 to sell into all that buy stop momentum, and that brought us down to a low of 1584. Now, as we're coming out of weekly prime support, I did not anticipate much of a reaction from such a small local level. However, we do have, as I said, the H4 resistance at 1622, and that's plotted on the H1 time frame as well. But also we have some Fibonacci studies going on around the 1630-ish range. And that comes in the form of a 38.2% Fibonacci retracement at 1634 and a 50% retracement ratio at 1631. Now, do note the 50% level is not a Fibonacci level. So do be aware, do keep an eye on this area today for a potential bounce rejection to the downside. Now, where are we on the Aussie dollar? We are still coming out of prime support. As I said in my weekly technical briefing, buyers are beginning to show some life from this prime support, which, should buyers continue to regain consciousness, we could be targeting prime resistance at 78.49, 75.99. With that, on the daily time frame, we do have room to the upside until we reach prime resistance at 75.06, 74.74. Now, do note above this area, we have some very interesting Quasimodo resistance in the form of a Quasimodo support term resistance at 76.21, and the 200-day simple moving average that comes in at 75.84. Also, Fibonacci traders will note we have a 100% Fibonacci projection at 75.51 and a 60, I believe it's a 61.8% Fibonacci retracement ratio at 75.85. Do take note of these areas for any longer term traders should take note of these areas. Now, if we do voyage above the 50 center line on our relative strength index, this could boost buyer confidence to the upside. So we could see higher moves if we cross above the 50 center line on the indicator. Now, for those who read my, that's on the daily time frame, by the way. So now we're moving over to the H4 time frame and the H1 time frame. Now, for those who read my weekly technical briefing, will recognize the H1 time frame. I highlighted supply at 72.78, 72.63. I highlighted that we were seeing some bearish activity into the close, but I also highlighted a really tight Fibonacci cluster around 72.81. Now this Fibonacci cluster, as you can see, is incredibly tight. I think it's within 2 pips. And we have a collection of Fibonacci expansion levels, Fibonacci retracement levels. As you can see, the 78.6 at 70, I think it's 72.80. And we also have, as I said, Fibonacci expansion, Fibonacci projection levels, all converging around this level. As you can see, we did whipsaw above this supply to take out any local stops around this area. And we have since produced a minor downside move. Now, if we continue, if we break this local support around 72.53, do keep an eye out on eye out for 72.37. Now, this is a quasi-motor resistance turn support again on the H1 time frame. Alternatively, if we continue higher, do keep an eye on the 73 handle, the 73 figure. As plotted just above here, we have the H4 resistance at 73.17. Now, a whipsaw above this round number into that resistance could be on the cards, similar to what we saw back in late September. Okay, so these are the levels to watch out for on the shorter term scale. Over on the H4 time frame, we are looking at the weekly. We did see a considerable reaction on the weekly time frame, which formed, as many candlestick enthusiasts will acknowledge, a shooting star. Let me just zoom in. A shooting star candlestick formation. Now, this is a bearish signal in the right location. Now, for me, this is a bearish signal as we're coming off, I believe it's 19-month highs at 112.08. Now, with that, on the daily time frame, we did recently last week, midweek, I believe, we reacted from a 1.618 Fibonacci expansion level at 112.05, and that delivered a reasonably tasty downside move to quasi-motor resistance turn support at 111.11. Now, as you can see, buyers are lacking in confidence here. We have seen some mild buying early trade from this level, so we could still see this level come into play sometime this week or early week. Now, moving over to the H4 time frame trade, again, those who read the weekly technical briefing will note I highlighted the H4 time frames supply turn demand area at 110.99, 110.77. The reason I like this area is because of its history. As you can see, we've capped upside since early July of this year. And we also had some local stops to take out around I think it was last Wednesday's low at 111.21. Now, with that selling momentum below these stops, using these stops, traders are clearly looking to buy into that momentum at the moment. With that, we also had the one, this is on the H1 time frame now, at this area here. We do have the 111 handle, and also a 38.2% Fibonacci retracement at 110.95. Also demonstrating that downside momentum was diminishing on Friday. We had a descending channel form as the approach into that round number. Now, with that, I did note in the weekly technical briefing, if we get a decisive close outside of this descending channel, knowing we're bolstered by H4 supply turn demand and albeit fragile looking daily support at 111.11, we could see some upside movement to H4 resistance at 111.60. So as you can see, we have in early trade this morning, we did break out to the upside and have retested the round number and held. So with that, we could be seeing some further upside to take out all of these local highs here to test the H4 resistance at 111.60. Now, with that, finally onto the pound. You will note that in my previous week daily market analysis on the videos, we did highlight the double top pattern, which is firmly in play now, I believe, as we've spiked below the supply turn demand on the weekly time frame at 36, 29, 34, 56. Now, with that being the case, knowing that we have potential direction on the weekly time frame to the downside, we could see a reaction from Quasimodo support term resistance at 36.09, and this is emphasized more on the pullback that was seen into the closing trade of last week. Now, with that, we also have some, I believe we have some fragile demand to the left of current price, which could eventually lead us to, as I think I've said, I think I've highlighted in previous analysis, the Fibonacci cluster around 31.21, 31.64, and as I said, as I've already highlighted, this converges with the double top target, double top take profit target of the on the weekly time frame. Now, do note we did bounce from, I believe we bounced from the oversold region on the relative strength index on the daily time frame, and we are seeing and the indicator's value is currently trading at 42. Now, should we test the 50 level as we test the daily Quasimodo support turned resistance at 36.09, this could add additional weight to a rejection to the downside. Also, do recall that we do have somewhat weekly direction on the weekly time frame. Now, with that, again in my weekly technical briefing, you will note that I highlighted this area of Fibonacci resistance between 35.83-ish and 35.63. As you can see, price did tag this level in I think it was late trade on Friday. Yes, late trade on Friday, and has reacted again in early trade this morning. This is a key level, guys. We could, if sellers strengthen their grip, we could retest the round number at 135. Alternatively, we could also make our way back to the 136 handle, as you can see here, and there is a tight H1 resistance at 36.16, which should be noted. And do understand that this 36.16 level converges nicely with the H4 trend line resistance, and I believe that's taken from the high at 39.13, and also converges closely with the daily Quasimodo support I mentioned below just a few minutes ago at 36.09. So do keep an eye out for this Quasimodo, this resistance at 36.16 today, if we break above this Fibonacci resistance area. So, and finally, just really quickly, we are testing on this is the daily time frame of the US dollar index, the geometric average weighted value of the US dollar against 6 major foreign currencies. Now, as you can see, we are reacting from as I said in previous analysis, we are reacting from a Fibonacci resistance consisting of a 38.2%. Fibonacci retracement ratio and a 1.27% Fibonacci projection at 94.40. We have recently tested support at 93.90, and this was a level I highlighted in the technical briefing on Monday for Monday. But I also highlighted that the decision point could also enter the fray at 92.71, 93.53, alongside a trendline support, which I took from the low at 89.84. So do keep an eye out on these levels this week, as we are in an uptrend right now, and these areas could attract dip buying scenarios. In addition to this, we can also see on the relative strength index, again on the daily time frame, we have trendline support convergence around, I believe it's the 60-ish area. So if we do have convergence with any of these levels on the charts, this could add weight to an upside move. And with that, that's it from me today, traders. I hope we all have a productive session ahead. Thanks for your time, and I'll catch you on Friday.